Let's start off with his legacy. We were just talking with our radio colleagues, and we kind of fondly remembering just how frank Munger can be, and Buffett for that matter too, just about economic conditions, about politics, about whether he thought a stock was worth something or just completely worthless here. It was a level of transparency and a level of honesty, quite frankly, that you don't always get on Wall Street.
Yeah, you don't always get it on Wall Street, and you don't even always get it from Berkshire Hathaway. You saw him at every annual meeting sitting next to Warren Buffett, and they would almost answer each other's questions. The one time he wasn't there, in fact, Buffett even brought a cardboard standout of him. And so he, in a lot of ways, was the confidence of Berkshire Hathaway. He was a key part of the investing philosophy, importantly, even kind of helped nudge Berkshire when they were uncertain to buy certain assets, like See's Candy, for example, which is such an iconic brand.
I'm fascinated by the See's Candy thing, because, I mean, this was pretty much his idea. I mean, Buffett was really against it. He thought it was too expensive. And Munger was the one who said, you really have to rethink what value is. And Buffett kind of cites this, right, in his, I think it was the 2015 book, right, where he kind of talks about this idea of how he was wedded to the philosophy of Benjamin Graham, but he kind of came to the realization at Munger's urging that things had just changed. The world had changed, and some of that philosophy just no longer applied.
And you saw both of them kind of play off each other in that way, even in more recent years in the way that they've thought about what they knew and didn't know about the technology industry. Another thing about this, to your point on the colorful language, because that is really something that everyone will remember him for, he really did call out bad behavior on Wall Street. He criticized banks for gambling at different times, and Bitcoin and crypto industries for being like poison. He really had strong words, and those are the kinds of sentiments that when you are looking for the opposite of value, froth growing in markets, who is going to call that behavior out again?
Yeah, well, he's in a position where he wasn't beholden to anyone or anything when talking about the possibility of investing in different companies. I'm just looking up a couple of his most famous quotes, and there are a couple here that are really great. Knowing what you don't know is more useful than being brilliant. Something that I think everyone can understand. When it comes to investing, there's a lot you won't know, but you have to go with what you do know and what you don't know, and being humble about that, right? Having the humility to move forward with that. Take a simple idea and take it seriously, for instance. In the story that our Noah Buhayer wrote on Charlie Munger, he described Munger as acerbic, which I really like, because it's kind of the balance to Warren Buffett and how excitable Warren Buffett can get sometimes.
Yeah, absolutely. And you have to think about just how far they've come in building Berkshire Hathaway. If you think about Berkshire in and of itself, how many businesses on Wall Street are now essentially Berkshire copycats? You think about that even with Apollo, the way that they bought insurance companies and used the float to make the businesses more profitable, to be able to kind of lower the cost of capital across the businesses. This wasn't just about what they did in terms of how they invested in certain stocks. The way they built the Berkshire business model by the end of it was supposed to be the best view of the American economy that you could have, the most ability to invest in those value trades, but invest in it in a way that you can operate them well. And remember, Munger, who was also a lawyer by training, a real estate lawyer, was kind of a critical part of that practical way of thinking as they made Berkshire what it is today.
You know, as we talk about what happens at Berkshire Hathaway, the succession plan that everyone is always reading into, how much did Charlie Munger come up in those conversations? It really felt like everyone was looking for the successor to Warren Buffett and less understanding what Charlie Munger's role was within that.
Think about it in two ways, right? Because he was Buffett's right-hand man. And you have Buffett himself, who is now 93. You have Ajit Jain, who is the minds behind the insurance operation. Now he is 72. You have really Greg Abel here, who has been anointed as the heir apparent for many years. He is only 61. And the future of Berkshire Hathaway, the succession planning every year comes into question, has slowly been brought into the planning atmosphere of this, but really the idea of Berkshire having Munger as the vice chair was really a matter of checks and balances and building a broad-based business with a lot of input into leaders that have grown together for such a long time.
And who trust each other.
Exactly. And so it's not that Munger was going to take over Berkshire Hathaway. That was never really the thought here. But, you know, the next generation, how do they lean on that partnership and discourse that Munger and Buffett brought to each other?
And talk a little bit, though, about just the discipline, because that was always kind of the hallmark, whether it was sort of maybe a little exaggerated, but we talk about the cash pile that they're sitting on today, but we've been here before in other cycles, and Buffett's been very vocal about that, is that you don't really jump until you really do see value. If you have the cash, it doesn't mean it's burning a hole in your pocket.
Yeah, I think that's an important part of this whole story, isn't it? Because they've been criticized over time on having that much cash and how they've used that cash. And remember, I think the private equity part is very important of this. The copycats you're seeing, the Apollos of the world, for example, because they have competition these days that they didn't have back then in terms of other cash piles that are now sitting around too. To the point that you're making here, they have been very disciplined. They're sitting on near record cash hoards today. And they themselves, both Berkshire and Munger, have gone back and forth on the opportunities they've missed, but they've also said that if you don't know, you don't jump in anyways.
Yep.